morning to all traders and welcome to another Markets and Waves video. In today's session, we're going to have a quick look on 5 different assets as always, and those are going to be the euro, the oil, gold, dollar against the Canadian dollar, and also the S&P. It's Friday, it's May 14th, and Fridays are interesting days to trade, right? Because there is usually big moves involved as the end of week flows kicks in. Now, we did of course see some interesting moves during the week anyway. Correction in euro dollar, gold as well, new fresh low for dollar CAD, potential reversal for dollar, the USOIL, and the S&P also corrected and maybe correcting still. So let's have a quick look, starting first with the euro dollar. As you recall, we called this move to the downside as a corrective move, and we've been expecting the 120.40 or so yesterday, and a rejection at the bottom channel. That's already actually happened. And from now, there is 2 scenarios I have in mind. One is, because this is 1, 2, 3, 4, and 5, that's the A and the B, and that is 1, 2, well, it could be considered 3, 4, 5, or it could be considered that this is some sort of, probably even some sort of diagonal correction or something, and we're going to get another leg down to take out the 120.40, which is the 100 Fibonacci of waves A and B. Yeah. Or instead of having another leg down, means that we've actually finished down here in C, another rejection level, and now we've got wave 1 and wave 2, and either we're going to get some sort of W, X, and Y here for a continuation to the upside, or it's going to be a case where we're going to start an internal structure. This is 1, 2, 3, 4, and 5. Then we're going to get the 3, then the 4, and the 5. Okay. So in terms of upside levels to keep an eye on, because this is what we need to do. We had a rejection at 38.2, so the next level up, once we break that, would be the 121.16, then 121.32, and 121.55, which is likely to somehow validate this move to the upside a bit more. But what would ideally be that validator will be, the internal structure, because we need 5 waves up. Okay, we don't need any corrections at this stage. If we look at the RSI and the MACD, we have very nice signals that indicate that there is a hidden bearish divergence to the here is bullish divergence, and also a very small signal over here that indicates again a bullish divergence. And we've got the MACD, actually the histogram turned positive, and we're expecting also now the 2 EMAs to cross the 0 line, of course, for that to be validated. Now, moving on, oil. Oil is moving exactly as expected, pretty much. We looked at this opportunity to the downside as a leading diagonal last time, and we talked about an ABC correction over here, and we're looking for a continuation to the downside. However, with the last leg to the upside, this is an ABC, or yes, the AB and a C here, or actually this is W, X, and Y most likely, because that's the ABC and that's then another ABC, so that's W, X, and Y in wave B, and then we've had 1, 2, 3, 4, and 5, and then diagonal here in wave C for an expanding flat, as you can understand, because we've got the B being below wave 1, and then of course wave C crosses the beginning of wave A. With that done, now I'm looking at this as 1, 2, 3, 4, and 5, which means wave 1 finished, and I'm expecting another leg up to take out wave 2. From there, a continuation for 3, then 4, and then a continuation again for 5. That is going to be, of course, my new 3, then the 4 and the 5, and perhaps what I've been expecting for a while now, the 50, well, anywhere below the 57.24 can be finally validated. Now, because there is a lot of calls from the community for a bullish move over here, and that oil is not corrective. But I have to tell you that to me there is nothing that is impulsive over here. Okay, I will provide you also an alternative scenario for a potential move to the upside. That would be a case where this is a W, X, and Y, and we finished wave 4 down here, because don't forget that in the end I'm waiting for this to be a primary intermediate 4, and I will be expecting a 5, right? That would make this the end, and that would be a leading diagonal over here. ABC remains the same, then we'll have 1, 2, and we'll have 3, 4, and 5, and that would be internally 1, 2, 3, 4, and 5. Yeah, so you can understand that this would be wave 1 and 2, and this would be wave 3 and 4 and 5. So this structure is not really, I mean, it can be considered an impulse, but it's not really, to me that's not an impulse, because the structures don't really match. They're not really respecting a lot of guidelines. And then after this 1 and 2, as I said before, it could be a case that we start another internal move for 1 and 2, okay? Because that's the only case that can actually be seen as a move to the upside, which means, hold on, 1, 2, so we've got the 1, the 2, 3, 4, 5, yes, that would be 1 and 2, and then 1, 2, 3, 4, 5, again we'll have another internal move, and that is like a correction that is likely to end anywhere above the 62.50 ideally, okay, and then continue up. So you can understand that we have to somehow enable a lot of multi-structural move to the upside in order to support this scenario, which to me doesn't have high probabilities to occur, okay? Still, what I will be looking though, I will be looking at this level over here. I'll be looking at 62.35 or so, okay? Because now we've broken that, below that level, broken all these past levels, yeah? And the thing that would perhaps help us validate the move to the downside will be the break of this wave, since you know, if that would be a leading diagonal as we just described, then in that scenario we would expect something like a drop below wave 1 to at least turn this into not an impulse, if that makes sense. Because the truth is, though, we could still get another leg up, yeah, which is another scenario, but supporting the main one that we've been expecting. That would be a case where you know, this wave B is going to be like this is going to be an ABC, and then we're going to get something like W, X, and Y for wave B above the previous high as an expanded or running flat, and then a 5-wave move to the downside. That is also a possibility as well, okay? So that we all have, you will have all the scenarios that you need there for your own consideration. What else I need to mention for oil and for oil? It's just that it's not really signals for the MACD or the RSI, which usually indicate that it's going to be a continuation of the particular trend. Now, jumping quickly to gold. Gold has been a little bit more bullish than euro dollar, if you have understood. That's purely because we didn't really get to the bottom channel of this ascending regression channel. We've done so far, it looks like to me, a W, X, and Y for wave 2, and we had a 50% bounce at 1807. And if you remember, the 1807, a few days back was the level we're expected to go up to, right? And to break for this to be considered as an impulsive move. Now, I'm looking at this, looking a bit more impulsive as well than euro dollar. This is the one, the two, we're expecting after this false break on the median regression, I'm expecting to see a continuation to the upside. That is a multi-structural move to the upside, by the way, and much more impulsive than the oil is looking. So with that said, guys, I'm looking at this to happen, or the other case would be, because we're still moving we still move it down, right? We still need to cross above that channel as well. Yeah, we still need to cross above that channel. There is a case that, you know, this could be something like that. We could have a WX and YZ, which is a triple zigzag, and then get finally this rejection down here. Or we could just move straight down and just get the rejection. At either case, I'm looking at this as a validation always for the particular scenario that I'm looking. So for now, more upside, in my opinion, is likely. On dollar CAD, we did talk about this move to the downside, and I did tell you guys that it's going to bounce at the previous low, and I did also tell you that most likely it's not going to be a reversal. It's most likely going to be a correction, and that to me looks corrective so far. Okay, now where are we going to stop? I mean, it's not really easy to say, but I will tell you a few things. First of all, wave 3 stopped around the 61 and 78.6 Fibonacci extension of wave A2, which means wave 3 is smaller than wave 1. And that means that wave 5 has to be smaller than both, right? Now, if we assume, and let's take wave 3 for a guide, that we finished at the 50 Fibonacci retracement over here. This means, and let's take wave 3 now, this means that wave 5 will not extend lower than the 119, will not. Okay. Now, there could be also a case though that we might get prices moving higher, because that could be a case where this is, you know, like W, X, and Y. So we're gonna get 122.35 or so, and from there, we're gonna move lower. That is going to reduce the downside extension for wave 5, right? If you can understand that, I assume. The other thing we need to really pay attention to in case we start moving higher up is whether we're going to cross above 1. If we do, the chances of that becoming some sort of open diagonal would increase, okay? Which means we can expect prices to go even up to 123.50 or so, to the previous high, okay? Because this is our last wave, okay, for at least for in the minor degree, okay? So this is what I'm looking at, this particular pair. And then we also have a very nice signal on the RSI and MACD that has already played in already, it looks like to me. But I think that's why I was talking about the double zigzag scenario and a potential upside to 122.35 or even higher, because we did get a bearish hidden divergence on the MACD. However, we didn't get that yet on the RSI. We might not get it, but we would prefer to see momentum, you know, moving a little bit higher to get that signal also on the RSI, and then we'll have two signals that support the bearish move. Don't forget also that despite that fact that we're looking at this scenario with this particular structure, it could also be a case, guys, that we've had like wave 1 ending here, that's 2, and we've got 1, 2, 3, 4, and 5. So that would be pretty much a different structure, okay, which is looking for wave 3 being highly extended and wave 1 here. So that means that we can still get that over here. Whatever happens here is irrelevant, but it would change the fact that in case we move higher, that can also turn to a sort of diagonal, because wave 1 would be up here, if that makes sense. That would give wave 5 a bit more of a leeway to go further lower down, okay, because there would be no limitation about how long wave 3 is, since wave 3 is going to be highly extended compared to wave 1. Now someone might ask, what about a reversal down here? Is that possible? Well, of course it's possible, everything is possible, but the current structure did not tell me that this is a high probability, okay? And last quick look on S&P, as we had looked last time, we've had 1, 2, 3, 4, yeah, and 5 done, looks like it, yeah. We didn't get all the way up here, but it's fine, it's expected. What we really need to, when we know wave 3 is in pretty much, is that when we get these 2 and 4 and 3 on the channel being rejected, yeah. And along that, of course, when we get a signal as for example, the one we get here. You know that that's a 3, and you know that's move to the downside is a 4, and although missed, and the breakout is the bigger correction. Okay, so this is what I'm looking here as well. We do have mixed signals here on the S&P though, because I've also got a longer term hidden bullish divergence in both the RSI and the MACD. Okay, what does this mean though? We're gonna move higher. Now, to me, you know what this means? That internally we're gonna get a move down, which we started getting, right? And then that will kick in down at the channel. This is at least my opinion. And from there, we're gonna look for another 5-wave move. Well, this cycle is going to, the bullish cycle actually is likely to end. So I'll be looking, because we've done this move actually down here. Now we can use the Fibonacci retracement, go the way up, right? We didn't even reach the 38.2. And to me, I think the 38.2 would be a nice level to take into account. Otherwise, guys, and we usually, try to give a lot of sort of scenarios for you to have in mind. Usually, what also happens, that wave 4 tends to, or wave 4 in generally, tend to finish at the same spot. Okay, so if we do get that break of the channel, the chances of moving down to the 37.21 would increase. Okay, so I'll be looking, of course, after this, the break of the previous one, and then the break of the previous 2. Okay, things will become a little bit more complicated, of course, but currently I see this as 1, 2, 3, 4, 5. That's the A. When I get the B, perhaps a rejection here, and now 1, 2, 3, 4, 5, where I'm expecting the 4K or above to provide us this base support that I am expecting. So thank you very much for watching, guys. If you have any comments, you know that you don't need to hesitate to comment, and I'll get back to you as soon as I can. Enjoy the weekend, and we'll speak again on Monday.